Hey there, everyone. The markets have been settling recently, and whether you're a bull or a bear, I think it's at least nice to have a little bit of relief from the recent run up that we've had. And I know that sounds funny from a bullish case, but we definitely don't want to see too steep of a climb too fast because that could lead to a big old drop for us. And that's just it's a little bit hard on the heart to watch that kind of stuff happen. We have an economic report coming out tomorrow at 8:30 a.m., and I'd like to talk about that and its possible implications that we have for Q4 numbers from 2022. So stick around, we'll talk about it, and we'll also talk about what's going forward from there. Also, before I get right into it, down in the description, there's a link to my Patreon. If you want to see more of what I have to offer, come on over to that Patreon, sign on up, and you get access to my research, the private Discord that's over there, and there's a few other perks as well. There's also some exclusive content. I put videos out over there. I'm putting up another one soon. I got an unboxing video coming up for you guys. So I hope to see you over there. Like I said, that link for the Patreon is down in the description. I'm Dr. Stock, Doctor of Education. Let's get right into it. So tomorrow we get the balance of trade report for the US at 8:30 a.m. And that's something that could be a market catalyst for us. We want to keep an eye out for that. And it could be to the upside or the downside because of its implications to the US GDP outlook that we have. Or for that second estimate that comes up right now, we're sitting at 2.9% is the first estimate that we have, the advanced estimate for GDP for Q4 2022. And this report for US balance of trade is for December 2022. And right now, the consensus is a deficit of $68.5 billion. And that is a deficit that is widening from about $61.5 billion. Now, when I say deficit, that deficit is something that historically the United States has for its balance of trade. So that's nothing really to be concerned about. If you take a look at what we have here on the St. Louis Fed, all these numbers here that you can see are negative. So it starts off at about negative $30 billion, and then it drops from there all the way down. We can see on the scale down to negative $110,000. And you can see where things got really bad for us in March of 2022. And that was really when inflation started taking off. And that was not a great time in the markets for us. That was a height of supply chain bottlenecks. So we see a widening of the deficit in 2022, but we have significantly moved upward from there into November, especially up from what we had in October. So December is actually expected to come back down off the November high that we have a little bit. So ticking back down from that trend, almost down to this little gray line that we see right here. And if you want some numbers on that, I have this from BEA.gov, and you can see the deficit was negative 61.5. I'm sorry, the deficit was 61.5 billion. So we have that number, and what that is, the difference of exports minus imports, and that whatever that difference is, that gets added on to the GDP. So if exports is a bigger number and imports is a smaller number, then GDP would go up as a result of that difference of those two things. However, exports bigger, and however, imports are the larger number, the greater number, and exports are the lesser number. And so when you do that subtraction, you get the negative number, this deficit that you have here. So that comes off GDP. So if that deficit should happen to widen significantly for December, so if we don't come in at consensus, instead we come up with something that's even lower than that, about 68-ish billion that we have for the deficit consensus for December 2022, that could really upset what we have for the advanced estimate for GDP for Q4 2022. So those are things that we really want to keep in mind watching as that report comes out to see what's taken place. So this report for December could change that second estimate that we get for GDP when it gets released to us. So just taking a quick look at GDP, for the advanced estimate that we got for Q4, it comes in at 2.9%, so slightly slower than Q3, and that's in line with what the Fed is telling us about having a slower growth in 2023. Now, mind you, they said that they believe that they currently don't see a recession, that they see instead slow growth. So between that 0 and 1% growth for 2023. So we'll have to see as that comes out, as we slip in from Q4 2022 into Q1 2023. And I think that this balance of trade report that we get for December is going to be very telling for us. Down here, it talks about the next release that we have on February the 23rd. So today being the 6th of February, that's 17 days away. So about 2.5 weeks from today, we get that second estimate, and we'll see if we have that impact of balance of trade on it and if it significantly impacts GDP as well. So that's something to keep in mind, something that I'm watching out for in tomorrow's market. I'm going to keep an eye on that. I do want to let you know that I did post about it over my Patreon. So if you want early access to that information, you can check it out. Also, if you want to see my exclusive videos that I post over on the Patreon, that link is down in the description. I would love to have you over there. It's a quickly growing community of people who are there to learn to better their lives in a financial direction. And not only that, there's a whole lot more there. Just working on being good people in general who just want to do better for themselves. And that's something that you just can't go wrong with. So what does reduced GDP mean for us for Q4 2022? Well, that could speak for further weakness, possibly for the beginning of 2023 for Q1. And that's something that's right now highly debated is, will we see that recession, or is there a lot of strength? And the tightened labor market is something that is really, that we're keeping our eyes on that to see if it speaks to strong economy, if it's something that's going to keep us out of recession. Does it allow us to thread the needle? Is inflation going to moderate? Honestly, that tight labor market jobs report that we got is something that could be a sign of inflation that is yet to come, or the fact that it's a little bit stickier, which could cause the Fed to possibly tighten more. So we really want to watch for that. We really want to watch the economic reports come out, and that's why I've been spending so much time with them, and why I'll continue to spend that time, release it over at the Patreon. Like I said, that link is down in the description should you want to check that out. The next thing that I'm really looking forward to is consumer sentiment, which comes out this Friday. I'll post my thoughts on that as well, and I'll come to you guys with a video here on YouTube. And then after that's the CPI report that we get on that lovely, or as my daughters do this, the dinosaur heart, on February 14th, that day of love, the day of Cupid, that the CPI will come out that day. And honestly, I wouldn't be surprised if it comes out a little bit hotter than what we saw for January. And that's something that can really spook the markets. With that said, I just wanted to take a real quick look at the NASDAQ, or I should say the Qs. When we look at this chart and coming down to that 200-day, I wouldn't be surprised should we tumble back down to that point. So right now, closing today at 303 in the Qs and going down $13 from there. That's between 4 and 5% that we could possibly give up in the near term if things don't go away. Consumer sentiment, I think, is going to be very good for us. We'll have to see when that comes out. CPI, I don't know that that's going to be so great to us. We're going to have to watch as that comes out. If we get signs that inflation is turning out to be stickier and not moderating as much as we thought, that might not go well at all. So it's just things to be aware of, things to watch for, and hopefully we don't put in any lower lows. I don't see that happening anytime soon unless we get something majorly out of whack. And hopefully these moving averages that I have here on the chart, they hang around for us, they work as support for us, and we see that golden cross play out and turn into the next bull run. So we can keep our fingers crossed, but we got to pay attention to that economic news in the background. That's why I keep researching it. That's why I keep talking about it. And that's why I'll keep on posting about it over in the Patreon. Like I said, come on over, talk with me in the Discord. Absolutely love to have you over there as part of the community. Links down in the description. Thank you very much for watching this video. I really appreciate it. I'm Dr. Stock, Doctor of Education. I'll see you in the next video.